Hello, everyone. Welcome to Feedstuffs 365. I'm Sarah Muirhead. Joining us today is Ronald O'Brien, President, North America for Nui Markets. Welcome, Ronald. Thank you for joining us here today.
Thank you, Sarah. Pleasure.
For those of you that are tuning in, we thank you for taking time to join us. If you have any questions, feel free to post them in the chat area to the right of your screen. If you're joining us through social media, Facebook, Twitter, or LinkedIn, simply post your questions directly in those channels. So Ron, we want to talk about the butter market here today, but before we get started, tell us about your background and the role that Nui Markets plays in the marketplace.
Thank you, Sarah. It's a pleasure to be here. Yes, my name is Ron. I am president of Nui Markets, and I have been in the dairy trading industry since about 2004, the first real bull market in dairy. I had a little bit of a career in the military, but I found my way to Chicago. And if you're in Chicago, you find your way to the commodities world very quickly. I had the pleasure of joining a firm, Downs O'Neill. They had originated the dairy futures market in the early 2000s, and they saw a lot of promise in me. They had the two largest traders in the dairy industry at the time, DFA and Kraft, and they were looking to take the proposition to the dairy farmers. So it was my role to bring in the dairy farmers to the sell side of the dairy futures market. I spent a good part of my the first half of my career, the first 10 years, bringing some of the largest vertically integrated dairy farmers to the CME, 20, 30, 50,000 cow dairymen that taught me the business. But it was an interesting time in the industry. Only 1 or 2% of the market actually used futures and options to hedge their supply. And I was able to learn a lot, but when I slowly realized how much I didn't know about the global markets. And it was around 2012, 2013 that I had joined a large Dutch trading house. The Europeans didn't have the futures markets like we had, so they weren't that experienced with the futures markets. And I was not experienced with the global dairy industry. So we married in 2013. They were the largest international dairy traders. And they taught me global arbitrage, how markets move, and how products are imported and exported around the world. And we created a global enterprise of risk management, so they could take larger positions and risk manage their inventories and their sales positions. But as I led that firm as their global derivatives director, I realized the need for faster data and a more digitalized experience. So I really wanted. We had the company had 40, 50 traders around the world getting bids and offers, but I needed more time, more real-time information. And that was when Nui Markets was banging at our doors to start to digitize some of our sales flow and our procurement. And I saw that it was a quickly rising on the scene, more so in Europe at the time. But about a year ago exactly, I saw a great opportunity to spearhead their North American division, and the rest is history. And we've been building enterprises for North America and all over the world. And maybe today I can explain that a little bit more. But essentially, Nui Markets is a agri-commodity tech company that builds digital marketplaces. We have 15 single seller enterprises, which is one seller. They have a private enterprise. They bring on all their buyers and they do regular tenders. And we also have 3 digital dairy marketplaces, one in Europe, one in North America, and one in Asia, that is a free-for-all of bids and offers in dairy markets and offers buyers the opportunity to do procurement tenders. So it's a reverse auction of sort. Buyer comes in and all the sellers attack. And they generate a lot of great price transparency data for all types of traders, and it's a growing enterprise. but we're slowly making ways. Specifically in North America is where I'm North America, but really Central America is where a tremendous amount of dairy demand is. And now we're slowly growing into South America as well.
Fascinating how technology can just kind of speed everything up. And of course, we always need to look at it from a global perspective. That's just an important part of that whole puzzle. So Ron, let's talk a little bit about butter. We're heading into that time of year when consumers are going to eat more butter than any other time of the year. We're talking what, cookies, cakes, pies, and all those other baked goods as we start to celebrate the holiday season. Where are we sitting domestically in terms of butter supplies at this time?
Well, we had a lot of factors that drove us up to the record high price of 350 and a quarter per pound in October. And probably none more than the production of butter. It was down year over year in August, a couple percentage points. But more specifically, in California, the milk production was down about 4.5%. So that's where a tremendous amount of the butter is made in the States. So that tight supply just coincided with some strong demand this summer. And I'm not how much everyone understands how the butter market is traded, but so much is traded on allocations, which is not necessarily which is when a seller offers their product at a market index, let it be the CME spot index that most people are familiar with. And just so many sellers. Earlier in the year, there was such a need for butter and such a worry that there would be a shortage of butter that a lot of buyers overbought allocations and a lot of sellers oversold them, probably more so on the sell side. So the sellers offer their product at a weekly average, but there were probably too many of them sold than actual butter. So those that needed the butter on a spot basis really couldn't find it from the supplier because essentially they were oversold. The product was coming in, but it was already sold on an allocation. So the buyers that needed the product took the spot market all the way up to that 350 a pound in a couple of weeks ago. Now things have let up a bit. Milk production's coming back slowly, and high prices do cure high prices. So we've knocked off about 6-7% off the market since those highs of 350 and a quarter. I think we're sitting at 336 today. But definitely it's a tight market. Cream has loosened up a bit around the country, and we are seeing some of that, more of that butter, and even the traders that bought that butter on allocation offering that product back on the spot market. But no doubt we are in a very healthy butter market, and maybe you talk a little bit about some of the retail news that we have, but we watch those stock numbers and watch those production numbers, but things are still pretty firm for butter, even at 330 a pound.
Well, let's go ahead. Let's talk retail. What's going on there?
Well, like I said, we build these enterprises. One of our clients is about 25% of the retail butter market, and they wanted to make an enterprise essentially so they could engage direct with the client. They always do take the client's phone calls when they want butter for retail, but they wanted to be more proactive and be able to plan their capacity a little bit better. So they built an enterprise to sell their allocations for next year. And when that was a couple months ago, we ran our first tender just about a month ago. And it was very healthy. About 4 to 5 million pounds of butter was sold in just about 30 minutes in their enterprise. And that gave a lot of price transparency to the seller, but it really showed the industry and myself included that the sellers have the leverage at this time. Maybe in the past, the sellers were more prone to being forced to sell, but right now they're sitting in the driver's seat, and some of these buyers, specifically retail buyers, are being forced to pay up a little bit more and are forced to use more risk management tools than ever before.
So is that pretty normal where you're looking at selling butter that far out? I mean, it seems like you're talking next year. Is that pretty common in how that works?
Yeah, like I said, the cooperatives and manufacturers, around this time of year, it's called allocation season. And that's where they try to sell as much as they can on an allocation price or an allocation sale that's based on either the CME spot market or the NDPSR. And that sell side, it behooves them to sell 100% as much as they can at the index price, because then they have to turn around and pay the farmers the same allocation price. NDPSR is how the farmers get paid, whether it's class 3 or class 4, based on the components based on NDPSR. So these cooperatives and these manufacturers, they have a lot of risk if they don't do anything. If they don't do anything, then they're forced to always just sell in the spot market. And even that could be under where the current price is. But so they're incentivized to sell allocations as far out as possible. And now, if you're sitting in a tight market at this time of year, then the buyers are more apt to engage in those contracts. But no, I would definitely say it's playbook, a play number one for cooperatives to sell as far as they can in the future, but at the price, hopefully, that they're also buying milk at.
Anytime you play the market, right? To get that right price at the right time, make it all come together. So, and you mentioned global as well. So what are we seeing going on in terms of, are we talking global markets when we're having this discussion, or are we talking domestic here?
I think everything is tied to the global market, and when it comes to either politics or money supply or currency risk. But we kind of sometimes live in a bubble, and I think the butter world as well lives in a bubble here, because we don't really export that much butter. We export almost half of the non-fat production we make. We export 10-15% of cheese, or hopefully want to. But when it comes to butter, we like to keep our cream and our fat in the States. And whereas other exporting competitors like New Zealand, they're more making whole milk powder, and that's essentially powder with to just dry down the fluid milk. We dry down the milk, but we keep the fat internally. So that whole milk powder market, specifically from New Zealand and where it goes into Asia, is a leading indicator on the health of the global market. And then that's kind of what we've seen over the last few months, is the imports into China, whole milk powder imports, 35.6% down year over year, just this latest in September. So we've seen declines in whole milk powder imports in Asia, and that's essentially backing up a lot of that fat on the world marketplace to be put into more products like AMF, or just it could be a competitor to the U.S. butter, which I think is kind of some of the reasons why we've slowed down in price. There's other reasons, like I said earlier, milk production in California is doing a lot better. Retail prices kind of peaking, and like high prices curing high prices. But that global whole milk powder market is really what keeps which keeps everything in check.
So would you say that from a demand consumption standpoint, we're seeing some pretty strong interest on the part of consumers right now? Is that kind of what the indication is then for butter?
Well, for butter, yes, and like you said, it's going into the season of high demand. But there's a lot of products that are made with the butter fat, and so it's not just necessarily the sticks of butter you think about, but it's all the complete utilization, and where it goes into all the products. But I do think that the world market maybe made a little bit of a bottom about a month or two ago. That solids market had been crashing most of the entire year, and it had a nice rebound and retracement. But I was looking this morning even at the milk production numbers in New Mexico. I think they were down 7.2% in September. And New Mexico is home to a lot of those big cheese plants, Clovis, a lot of milk, and that's probably where the milk is the tightest in the country. So that milk, if that area needs milk, even though cheese might be in the 170s a pound and not $3 like butter, but that acts as a drain on the class 4 markets, which is butter and powder. So that milk will go to that location or go to other locations to make cheese. And then you kind of are shorted on the class 4 milk plants, which usually and historically act as a balancer of the US milk supply. So I think things are pretty healthy on an aggregate of class 3 and class 4 milk. Although, you still have these high energy costs, the high interest rate is probably the biggest thing that we're really not taking into account of how the long-term effects of it, of long-term effects of investment and long-term effects of buying patterns. But yeah, the markets are definitely pretty stable here, and again, 330 a pound is a bull market. But again, it had shown some signs of cracking a couple of weeks ago when I wrote a particular article that maybe you guys can find on your website as well.
Mm-hmm.
The market already kind of started to crack when I posted it, so I'll take the credit.
There you go. Anything going on in DC or from a policy aspect that people need to watch or be aware of when it comes to relating back to dairy?
Well, there's a lot of heated debate right now going on with the make allowance and then the farm bill, and probably the two of them are going to be tied somehow. But the make allowance of what essentially manufacturers charge to process the milk, and on one side it's saying that it's too low, and it needs to be adjusted higher, and there's probably agreement on higher, but how high? Because essentially at a time when dairy farmers are looking to get as much from their milk check, they're not all kind of aligned on having more deductions. But I do have a good understanding of the freight markets specifically, and just making anything or moving anything around the world, it just costs more nowadays. But the debate is heated, and I know it has some co-ops pitting against each other, but I'm sure things all wash out, and the support programs that we do have will continue to go in effect in next year. But yeah, DC's always a enigma, and I don't pretend to throw my hat in that ring.
Smartly so, I'm sure. So any final thoughts or insight that you'd like to leave our audience with here today?
Yeah, well, we at Nui Markets, we're building these digital agri-commodity exchanges, and right now we have sell-side enterprises. Like I said, 15 of them. I'll name drop a few: Hilmar, Dairy Gold, Ampy, One Dairy, Challenge Butter, Arla Foods, Friesland. I wouldn't keep going on and on, but they're single seller enterprises, and I see a future where those, and I know maybe a lot of our the people listening might be dairy farmers more than executives running manufacturing plants, and I see a future where those sell side enterprises that engage globally with buyers around the world to get the best, most transparent price, I see them also turning around and using them as buy side enterprises to buy milk from their farmers so they can do more active forward contracting, and even doing a little bit more competitively with their farmers. So essentially the farmers become the sell side liquidity of these buy side exchanges that we're building. And then going a little farther, I see these farmers as sell side enterprises, selling their calves, buying their grains, selling carbon, selling water rights. So the future is really bright for Nui Markets. We're looking for strategic partners to build and have these long-term visions with us. But again, it's the culture of change. You can't stop it. But in our industry, a lot of professionals like to hold on to what they got unless they're forced to change. And but the markets are definitely slowly evolving, as we have to have more efficient market. We have to do more for less, more efficiency, and we have to have more customers around the world with less budgets. And hopefully, we can provide that niche in these agro-commodity markets specifically for the dairy industry. But I'm pretty vocal about it. I'm online. I'm on Twitter. I'm on LinkedIn. You can find me very easily. Ask me questions. But I truly appreciate the opportunity to speak to you and your network today. Thank you.
Well, thank you so much for joining us here today, Ron. Likewise, we want to thank all of you for tuning in and spending time with us. A reminder that all Feedstuffs 365 segments are available online at feedstuffs.com. Simply go to feedstuffs.com, scroll down until you find the Feedstuffs 365 box. Until next time, for Feedstuffs 365, I'm Sarah Muirhead.